Okay, let's jump right into this explainer, because today we're looking at a total paradigm shift in how you build wealth. We're unpacking the all-in-one loan, which is this really revolutionary mortgage product from Epic Lending. Guided by the real-world expertise of mortgage strategist Ricky Khamis and his elite team, we're going to completely shift how high-income earners, entrepreneurs, and real estate professionals think about debt, liquidity, and cash flow. We are literally tearing down the old rules of banking to show you how the exact same income you earn today can dramatically accelerate your net worth.
Well, to really grasp this shift, we've got to ask ourselves a pretty fundamental question. Why do even highly successful, high-income earners stay trapped by traditional mortgages for up to 30 years? It's kind of wild when you think about it. The harsh reality is that they're stuck in traditional closed-end mortgages. These are loans where the terms are super rigid and they artificially prolong your payoff. The banks front-load the interest. That means for the first decade, your monthly payments are overwhelmingly just servicing interest to the bank, barely making a dent in your actual principal. It's an incredibly inefficient system, basically designed to keep you in debt, regardless of how successful you are. You see, the core of the problem is just how we're all traditionally taught to bank. The standard financial setup completely separates your everyday checking account from your mortgage. Think about this for a second. Your hard-earned income, what we call lazy money, is just sitting completely idle in a checking or savings account, earning next to zero yield. Meanwhile, across the street at a totally different institution, your massive mortgage debt is wide awake, compounding heavily against you every single day. You're essentially leaving your most powerful financial weapon, your cash flow, just sleeping on the sidelines.
So enter the all-in-one, or AIO, loan. Pioneered back in 2005, the AIO loan completely rethinks this broken, isolated flow of money. It elegantly merges your home financing and your personal banking into one single, dynamic tool. Technically speaking, it's a first lien home equity line of credit, meaning it completely replaces your traditional primary mortgage, featuring a 30-year draw period, combined directly with a fully integrated FDIC-insured checking account. It takes your mortgage from being this rigid, deadweight burden and transforms it into a highly functional financial command center.
What's absolutely brilliant about this strategy is the seamless connection. Your home mortgage and your personal checking account are no longer these isolated competing systems. They are functionally locked together. Instead of sending one fixed payment away every single month and just totally losing access to that capital, your mortgage literally becomes your bank account. Every dollar that enters your financial ecosystem is now simultaneously functioning as liquid cash for your everyday life and as an aggressive weapon against your housing debt.
Okay, so how does this actually play out in the real world? Step 1. Your regular income, whether that's direct deposits, commissions, or business revenue, flows directly into this integrated checking account. Step 2. Every single night, those deposits are automatically swept to pay down the unpaid principal balance of your loan. You are instantly attacking your debt with your entire paycheck. And then Step 3. As you need money for groceries, bills, or investments throughout the month, you just spend normally. Your funds remain 100% accessible 24/7 for the entire 30 years.
Now this next point is absolutely crucial. Interest on the AIO loan is calculated daily, not monthly. Traditional loans average your balance over a 30-day period. But with the AIO, it's almost like a financial Roomba. Because your entire paycheck was automatically swept against the principal the exact moment you got paid, your daily interest charge just absolutely plummets. Every single day that your money sits in your account before you spend it on living expenses is a day it actively prevents the bank from charging you mortgage interest.
When you project this over time, the difference between the two approaches is just staggering. While traditional amortizing mortgages crawl along at a painfully slow, linear pace, the all-in-one loan creates this aggressive downward curve in your principal balance. Because you're harnessing the velocity of your daily cash flow, your principal drops sharply. You safely accelerate your payoff and dramatically improve your equity position so much faster than a standard loan. And honestly, the best part? You pull this off without even changing your day-to-day spending habits or lifestyle. And we've got the real-world data to back this up. Before anyone even steps into this loan, their exact financial profile is stress-tested through an interactive simulator. In a highly realistic side-by-side scenario using the exact same income and expenses, the standard comparison loan takes almost 27 years to pay off. But the all-in-one borrower, they achieve complete payoff in just 12 years. That is a massive 15-year acceleration, directly saving over $49,000 in completely unnecessary wasted interest payments. No way, right? Now you're probably thinking, do I have to give up my everyday banking convenience to get this kind of financial velocity? Absolutely not. The integrated checking account comes fully loaded with all the modern banking features you're totally accustomed to using. We're talking ATM, debit Visa cards, fully functional online banking and bill pay, a modern mobile app with remote check deposit, direct deposit, and, yep, traditional personal checks. It looks, feels, and functions exactly like your current bank. It just acts significantly smarter behind the scenes.
Of course, a strategy this powerful naturally brings up questions about risk and safety. Well, the answer speaks for itself: zero. Historically, the all-in-one loan continues to set industry records with absolutely zero defaults. How is that even possible? Because it explicitly requires strong, consistent cash flow and high discipline to qualify in the first place. Plus, because it inherently keeps your home equity highly liquid and accessible at all times, it prevents you from ever becoming house poor. It's an incredibly safe, effective tool for the right borrower.
And look, this isn't just theoretical math. Real-world clients of Ricky Khamis are out there consistently using this exact product to strategically build their wealth portfolios. Take Jamie, for instance. They needed to expand their portfolio, and Ricky's team used the AIO to provide creative financing for a second home. Because the AIO lets you seamlessly utilize your equity without the friction and cost of constantly refinancing, it becomes the ultimate leverage tool for sophisticated investors and families who are looking to strategically expand their real estate holdings. But navigating a sophisticated setup like this means you need a serious, battle-tested guide. You definitely do not want to attempt a masterclass strategy with a novice loan officer. Ricky's team at Epic Lending is repeatedly recognized by clients for their elite-level execution, total transparency, and incredible efficiency. They make these complex financial transitions so smooth, ensuring you are supported, educated, and protected every single step of the way as you step into this new banking paradigm.
Let's be totally upfront, though. This strategy is not for everyone. It requires a minimum 700 FICO score and is custom-built for highly disciplined households. It's an absolutely perfect fit for the self-employed, commission-based professionals, realtors, and business owners who maintain robust, positive monthly cash flow and hold at least 10% in residual income. If your income is occasionally lumpy, or if you just prefer to keep high cash reserves sitting around, this loan weaponizes that specific cash flow behavior entirely to your advantage. And hey, for the real estate professionals tuning in, mastering the all-in-one concept is a total game changer for your career. It fundamentally shifts you from being just another transactional agent into a highly trusted, invaluable financial advisor. When you can sit down with an affluent, sophisticated buyer and show them exactly how to properly leverage their cash flow to pay off a luxury home in half the time without altering their lifestyle, you don't just win a single deal. You secure a fiercely loyal client for life.
So, as we wrap things up today, I want to leave you with a vital question. Is your current mortgage working for you or against you? You can keep letting your hard-earned money sit lazy in a traditional bank while your massive debt quietly compounds across the street, or you can choose to harness the velocity of your income, connect with Ricky Khamis and the team at Epic Lending, and truly command your financial future. The choice is yours.